888-480-JOHN. Let's get to Todd Sheets is with us. Todd needs no introduction. Weekly guest on our show. Todd is one of our economic gurus and knows more about the 2008 financial crisis than anybody. He's also on Substack. Todd Sheets doesn't charge for it like me. Yay. Thank you, Todd. Todd joining us now. Todd, you're on the Iowa bus tour, day 2. John Fredericks and Chris Saxman. Look, I opened today. This Trump economy, Todd, it is booming. I mean, we're going to have another 4% growth in the ensuing quarter, I understand. That leaked out yesterday by the Fed. Stock market hit 50,000. People's 401ks are higher than they've ever been. Precious metals are holding strong. Prices are stable. Healthcare is the one disaster, right? Prices are up, can't do anything about it. But we got RX, Trump RX, drug prices coming down. And, jobs continue to come back. Wages are up. Now Trump's talking about the $2,000 tariff tax rebate, as well as these other rebates coming back from the one big beautiful bill. And it looks like maybe the Trump administration, maybe President Trump turning the corner, maybe for the midterms, maybe this economy is going to be what we all thought it would be one day, right? What was the old what was the old football coach from Arizona, right? They are who we thought they were.
Dennis Green.
Dennis Green. Play that, Tyler. Find that. We are who we thought they were. I'll just crown them now. You just crown them now. Just crown their asses.
Playoffs.
Playoffs. We are who they thought they were. All right, Todd. What do you think?
Yeah, so look, I agree with what you're saying. I think the key part of it, though, is still in the jobs picture. And that's still the place where we're getting a very mixed reading on things. As we've talked about, the fact that we've seen these very strong GDP numbers for the last couple of quarters should give everybody confidence that we're not headed into a recession and that something else is keeping this growth from translating into jobs the way it should translate into eventually and normally would in a period of growth like this. But I think that's the key factor there. I mean, I think and until that happens, I think it still feels to most Americans like, okay, this economy is working well, stocks are going up, home prices aren't going up as much as they were before, but you're talking about a lot of things that aren't affecting me in my daily life. And so I think the jobs and the inflation are really the big things that have to come together here in order for this to coalesce into kind of the political groundswell that it has the potential to.
Walk us through how that happens, Todd.
Well, the biggest thing is if you keep growing at the rates that we are growing, eventually it has to turn into jobs. I mean, these companies, you're creating so much growth in their revenues and that kind of thing that they are going to have to hire people in order to continue taking advantage of the growth opportunities out there, or you're going to lose out on those opportunities. So you can go through an initial period here, and you hear a lot of things, you hear a lot of explanations. The ones that make the most sense to me is, one, there is still some continued downsizing going from the ramp up of hiring that occurred after COVID. Many companies ramped up after COVID and they never then right-sized. Some of the tech companies did, but that's an explanation that you hear a lot about there. I still think, as we've talked about before, I support the tariffs, but they've got to get them buttoned down, because especially to the extent that this is happening in small to medium-sized businesses, where I think a lot of these job issues are occurring, those guys don't have the flexibility to hire people if they can't figure out what they're going to have to pay for the things that they're importing that they want to sell here. Mm-hmm. And then they're also getting hit with the fact that to the extent that they are importing things that have a higher cost point because of the tariffs, they know they can't pass on those higher costs in prices right now. So that's hurting their profit margin a little bit. And as we've talked about before, interest rates today are normal compared to history, before the last 10 years. But many of these businesses, and this is one of the problems that happens when the Fed monkeys around with the system and they hit these super low interest rates to try and turbocharge the economy. When that lasts for a number of years, then businesses build their pricing model around the idea that, hey, this is the long-term interest rate. And so now as rates have come back up to a more normal level, to them, they feel like, oh, I'm getting whacked on the debt side of things. So I think these are the kind of things that we're dealing with. But look, if this growth stays at these levels, the jobs are going to come. It is just a question of when. And I think when the jobs come, as long as they continue to hold the line on inflation, which I think they will. I think Kevin Warsh was a home run of an appointment for the Fed chair. Then I think we've got a real opportunity to see this groundswell that everybody's hoping for.
We had Dave Bratt on yesterday. He was not a Warsh fan. He said he was all about Wall Street, not Main Street, and he was afraid that he would go back to bail out the big banks, too big to fail. What is your response to Bratt? Bratt was not happy.
Yeah, I'm very happy with him. I think Warsh is the first time we've ever had a Fed chair coming in who, in advance, is talking about the dangers of this institution and the problems that the Fed has caused in the past. And, he's talking about, needing to roll back the massive bond purchases that are still on the books from the Bernanke program. Warsh actually resigned from the Fed over that program. He was there with them, supporting the idea of putting this money into the economy in the midst of the crisis, which was right. But then when Bernanke kept running that playbook, 3-4 years after the recovery had already occurred, he resigned. So he understands that. He understands that the Fed should not also have all this regulatory responsibility that was given to them in the aftermath of the financial crisis. And I think he understands as well that long-term, having sustainably low interest rates is a function of keeping inflation down. And keeping inflation down is a function of having growth in the money supply that is consistent with growth in the economy. And that's the key thing. So the faster the economy grows, the money supply can grow faster. But you can't have the money supply growing significantly faster than what's happening in the economy, or you end up with inflation.
Well, that's why we had it under Biden. I mean, they printed all that money for the spending bills. It was backed by nothing. It's not even on the Federal Reserve balance sheet. It had nothing behind it. No growth, like Milton Friedman said. Right? Money supply has to match gross domestic product. If you go off the gold standard, and we didn't do that, and then we flooded it, and then the inflation goes up, and everybody's shocked over it. Now Trump gets blamed, and he's trying to fix it.
That was the affordability crisis, that right there. And it also went into housing. I mean, there are times in the economy when it doesn't always go into consumer prices. And that's one of the things the Fed did not understand over the last 20 years. Yep. So, when you're offshoring to China, and that is holding inflation down, plus you have this technology boom, which is helping hold inflation down. Well, they push interest rates down, and the consumer price index doesn't go up as fast as you would have expected in the past without those things. And so they think, oh, well, we can do this. We're getting away with it. What they don't understand, and they still haven't admitted, is they created a housing bubble with that money.
Right.
And then in the 2010s, they created an affordability problem with that money. And then the consumer price problem came also with Biden when some of these other factors were starting to moderate a little bit. So, but I think Warsh gets these things. He's as close to anybody who gets these things, I think, as we've ever brought in, and who believes that this is an institution that needs significant reform. Whether it will happen or not, we'll see. But he believes it.
All right, let's go to a quick word from our sponsors. When I get back, we got Anthony from Florida. We got Alfredo Ortiz backstage. We got Todd Sheets. We got Chris Saxman. We got economics. We got jobs. We got Iowa Bus Tour Day 2. All right here on the John Fredericks Media Network. Don't forget, go to our website, johnfredericksradio.com, and vote in our first in the nation straw poll for President 2028 GOP. The results we're getting right now are very surprising. But we got to keep those votes coming, so go there and vote. Takes you about, what, a minute and a half?
Tops.
Tops, 90 seconds. Tops.
30 seconds, really.
30 seconds if you're my son, Joe, and you can navigate your way around your iPhone in the jickety split.
Yeah.
We'll be right back.